Do you want to have a little more confidence in the companies that you choose to invest in? Do you understand how much they are truly making and what they are doing with the money that they do make? This video will help you understand a little bit more about the companies that you are investing in and give you that extra boost of confidence when you do choose to invest into them. Let's get into it. Welcome to Piece of the Pie with Ty. I'm Ty, and I appreciate you guys coming to check out my channel. My channel is all about making sure people are aware of the different avenues to get a piece of the pie. So if you like any of the content in this video, please hit that like button. Look something like this. It really helps me out with the YouTube algorithm. And subscribe to the page if you like any of the content. And even share if you think this video could possibly help someone else. Okay, now let's get right into the topic. Today we will be discussing fundamental analysis. Fundamental analysis is a way for you to get insights on the companies that you invest in and know actually what they're doing with their money, how they're earning money, if they're earning money. All of these things are good things to know so you can have extra confidence in your investment. In our analysis today, we will be going over 3 different types of financial statements. We will be going over balance sheets, income statements, and cash flow statements. These 3 statements will definitely help you get insights on the company that you are investing in. These help you tell the financial strength of a company, which will also give you confidence in your investment. First off, we're going to start with balance sheets. Balance sheets compare a company's assets, liabilities, and owner's equity. Okay, so let's go down each one of those to make sure that we fully understand what they are. Assets are a company's cash, equipment, property, anything of value that the company owns. Liabilities are debts, loans, mortgages, invoices, anything that that company has as a debt. Owner's equity is the amount of capital raised by issuing stock. Liabilities and owner's equity equal the assets of the company. So once you know this figure, you can know if a company is underwater or above water by looking at a company's balance sheet. Let's go to the next one. Income statement. Income statements show how the company spends its money. Income statements are comprised of revenues and expenses. Of course, revenues mean how the company is earning money. Expenses is how much it actually costs to run the company. It could be interest, operations, how much they paying their workers. You can find all of this on a company's income statement. A company's revenues minus its expenses equals the company's net income. And the company's net income could be used in different ways. It could be given back out to shareholders via dividends, or it could be reinvested back into the company. Companies that usually don't give out dividends are reinvesting more of the money into the company so the company can grow. For example, like Amazon doesn't give out a dividend. So what are they doing with their net income? They're reinvesting it into the company. A company like Coca-Cola gives out dividends. So they're not reinvesting all of its profits back into the company, but it's a stable company and it doesn't have but so much more growth to branch out and do like Amazon does. Amazon still has a lot of growth to do. That's why they're popping up everywhere and building more warehouses and distribution centers, because they're still growing. They haven't got to the point where they're just stable and they've branched out as much as possible like Coca-Cola has. They're all over the world. They're a pretty stable company. Any more growth they get is going to be from innovating maybe new drinks or something. Not so much of branching out and make sure they are building new factories in different places. But to know how your company is spending their money, of course, you have to go to the cash flow statement. Cash flow statement shows how a company uses its cash. Typically, it's divided into 3 different categories: operations, investments, or debt. This shows a detailed account on how the company produces its revenue. All of these things are good things to know about your company that you're investing in. Another way you can look and see if a company is valuable or not is looking at ratios. There are a bunch of different types of ratios you can look at. You can look at price to earnings ratio, which is the PE ratio, debt to equity ratio, or net profit margins. It's a whole bunch of different ratios that you can look at before you invest in a company. But we're just going to stick to the most common one, the PE ratio. Looking at this can tell you if a company is valuable or not. So how do you find the PE ratio? To get the PE ratio, first you have to divide the net income by the outstanding shares. This is going to give you the earnings per share. Once you have the earnings per share, you're going to take the price of the stock and divide it by the earnings per share, and that will give you your PE ratio. Now that we know the basics of a balance sheet, income statement, and cash flow statement, we're going to go to the computer and check it out. Okay guys, so now we're on Charles Schwab website. I do like the tools that Charles Schwab has on their website. So I'm on Charles Schwab right now, and we're going to look up a stock. We're going to do Apple. I like to do Apple because everybody knows Apple is a good company and their statements definitely show it. So up here, now I'm going to go to statements. Charles Schwab gives them an A, by the way. Alright, and you can look at their statements by quarterly or annually. I'm going to go to annually. And our own statements. So first we're going to start with what we talked about first, the balance sheet. So this is a balance sheet. This is Apple's balance sheet. If you're looking at this and you're thinking these numbers are low, they are. Look over here, it has a little note. Values are in millions, except for per share data. So when you look at current total assets, you see this 143,713. That's million. So if we were looking at this, you would want to look at the total current assets. That's what they have currently, but total trumps the current. So if we looked at the total assets it has, we see Apple has 323,888. That's how much they have in assets. Then you look at the total liabilities. As you see, the liabilities are 258,549. So just off that, we see that the assets outweigh the liabilities. And then we go down to the bottom and you can see the total liabilities and shareholders' equity. And as you see, this equals the total assets. So this right here tells you if a company is profitable or not. Because again, liabilities plus owner's equity equal to assets. So we can tell off rip that Apple is profitable. By the amount of assets Apple has, it's profitable. It outweighs the liabilities and it's profitable. By this balance sheet, you can tell that this company is making money. Now let's go to the income statement. And it's on this page where you can tell where the company is getting its money from. So you have the total revenue, then you have total operation expenses, total operation income, but what's really important is this net income. So Apple makes 57,411 million in net income a year. So again, you still can tell that this company is making money. But what's good is you can see how much it takes to run the company. So we know that this company makes money from their operations. Now we want to see how they spend that money. We're going to go ahead and look at the cash flow statement. And on the cash flow statement, you can see that the total cash from operation is positive because they make money off operation. But then you see total cash from investing. You can see that this right here, these parentheses mean negative because they're spending money on investing and innovation. Same thing with cash from financing is negative because they're probably financing things within the company. This right here tells you it's making money off operations, but then it's losing money because it's investing and financing its businesses. And then it even tells you the net change in cash from year to year. I just wanted to show you guys what it looked like when we actually went to a stock, where to find these things. And I use Charles Schwab because, again, they are pretty decent. I really like Charles Schwab because you can really go into depth on a company with Charles Schwab. You can go look at a whole lot of other ratios, but that was just a quick rundown on the 3 we went over today. Okay guys, that was a quick run through on balance sheets, income statements, and cash flow statements. I hope you guys found all of that information useful, and know this might be a lot of information to take in at once, but knowledge is power. Knowing these things are going to give you confidence in your investment, and you're going to know what you're actually getting into. You might feel a little uneasy if you know you got into a company that isn't even making a profit, is losing. If you know their net profit is negative, you might have second thoughts before you dive into that company. So these are extra tools to look at before you get into the company. I know you guys know my motto is about the common sense of things. The common sense of things will get you there, but knowing this will keep you there. If you like this video or any of the content in it, please hit that like button. And please subscribe to the page and come back and see me. I appreciate all you guys coming to check my channel out and checking this video out. Make sure you come back and see me for my next video. Thanks.